Hello, welcome. Welcome to the Money Champions webinar for supporting UK's merchant seafarers. My name is Martha Lawton. I work with the Money Charity and we are an independent organisation supporting people across the UK with their financial well-being. And I'm really delighted to welcome you to this session. As it is being recorded, obviously that means that if there's something you miss, because we're going to cover a lot today, that does mean you will be able to watch the recording and catch back up on that. One of the things I want to say, so this is about how you can support the UK's merchant seafarers. We're going to cover a wide range of topics associated with that. We're not expecting you to do this 90-minute webinar and then be miracle workers and able to completely transform somebody's finances, but it is amazing what the right information at the right time can do. And we're going to give you a whole bunch of resources and experts that you can refer to that will enable you to make a real difference for people. So I'm excited about this one, and I hope you are too. Okay, so as I've just said, it's a 90-minute webinar. If you want to pop questions into the chat, I'll do my best to answer them at the end. There's no requirement for anybody to share any kind of personal information. And similarly, I'm not a financial advisor, so I'm not able to give personal or tailored financial advice or recommendations. I'm also completely impartial, as everybody is at the Money Charity. So we're not affiliated with any particular financial provider. This webinar is being recorded. There are associated digital handouts, and there's also a couple of really fantastic web resources on the Seafarers Safety Net website, which is Seafarers Safety Net, Seafarers Safety Net, say that 3 times fast, .org. So highly recommend you go check that out after this. Okay, so here's some things we're going to be talking about. We're going to be talking about how do you have good conversations about money? How do we give support and information and not step over into regulated financial advice? We'll talk a bit about kind of everyday topics like budgeting, how to signpost to tools and resources, how to make a spending plan and save money. And we'll talk a bit about some of the tax relief topics and national insurance. Great. And Sharon has very kindly just popped that link to the Seafarers Safety Net website into the chat. So that's great. Thank you very much, Sharon. We will also talk a bit about credit, borrowing and debt, the cost of borrowing, the difference between good debt and bad debt, and between priority and non-priority debts. And we'll talk about credit unions and how to find them as a good type of ethical, affordable lender. We'll talk a bit about scams, avoiding and reporting those. We'll talk a bit about pensions and some other information that's particularly relevant for older seafarers. And we'll also talk about some of those resources and organisations that provide the more specialised expert help in terms of free debt and money advice. And then how to signpost those effectively so people actually get the advice that they need. So, as I said, there's a lot to put in here. We're going to have to go pretty quick, but everything is backed up by the Seafarers Safety Net website, so you can always go and check that out. Okay, so first of all, I want to start with a quick poll, which is just about how confident you feel at this moment talking with money about seafarers. So I'm going to launch that poll now, and let's see how you feel. Your answers are anonymous, by the way. We're not looking to shame you here. Okay. So let's see how you're getting on. Okay, so a couple of people still to answer. Okay. Second. Okay, is everybody happy that they've answered the poll? Okay. All right, so we've got, I'm just quickly noting down some of those numbers for our records. We can see roughly what a difference we hope to be able to make during this. So broadly, mostly 2s and 3s, some people not confident at all, some people more confident, It's great. Hopefully we can lift those scores by the end of this session. So thank you very much for answering that for me. Great. Okay. So we want to start off with why seafarers? What is it that's so important about making sure that seafarers have really great skills around their money? And there are some specific things that can make managing money a bit more challenging for seafarers. So they are, number one, they may need to complete a self-assessment and pay their own income tax and national insurance. So there are specific tax issues for seafarers. Some do or have done seasonal work, and that means that income varies through the year, and therefore spending has to be managed really carefully in order to make sure that that doesn't have issues where there's a lot more month than money at some point. If they don't manage their finances within the UK, make sure that bills are properly paid or bank accounts are appropriately topped up, you can end up with having an impact on credit scoring, which then has a big knock-on effect. There is a higher risk of injury, which means that they need to be better protected in terms of having a bigger emergency savings cushion and so on. And then obviously there is this kind of specialist tax and also pension provisions as well. So just not quite your average PAYE employees in various ways. Okay, so let's have a think about the conversations you're going to be having and how can we have good constructive conversations about money with seafarers. So have a think for a moment about this question. If you need to talk to somebody about your money, what do you want from them? How would you want to be treated? Just take a moment and consider that. I'm sure that a lot of you can have a really clear idea of what it means to have a good conversation about money when you are the one going for advice or guidance. So, excuse me, little frog in my throat. Let's have a look at some of the things that the seafarers will want from you. So first one, really, really important, privacy and assurance that personal information will be kept confidential. I think for all of us, money is one of the most private things about ourselves, and particularly if anybody's having a struggle with their finances, nobody wants to think that that information could spread or be gossiped about. So making sure that they're aware that you're going to talk in private and that personal information that's shared with you will be kept confidential. The next one's just about basic ethics, right? That you're not going to use that information or your position as a money champion to try and make a kind of personal gain. You want to be listening really carefully and not jumping to conclusions. So it's amazing how judgmental some people can be around money, but you need to not do that or people won't come back. And they may even say to others, don't talk to them. They didn't really listen. That's the kind of the worst thing that anybody can say about somebody giving any kind of guidance is they didn't listen. Be really honest about how you can help and what you can't do. Don't try and blag it. There are lots of experts and resources out there. So if you're not sure, say, I don't think I can help with that, but I'll see if I can find somebody who can, rather than, trying to fudge that. Don't push people towards a single solution. So make sure that they know what the different options are and what the pros and cons are of those options, and then they choose rather than you pushing them towards that specific solution. I'll talk more about that in a minute. Don't use jargon. There's a lot of annoying jargony language around money. So try and avoid using too much of that technical language. Explain everything in nice, clear, plain English. Refer to experts, and we will be talking about some of those expert resources. And again, that Seafarers Safety Net website has links to those on it. So that's really good. And that goes along with the kind of being honest about what you can help with and what you can't, is, getting those referrals over to experts whenever there's something that goes beyond yourself, and also focusing on the future. So again, it's very tempting when somebody has been unwise to look at them and just say, oh, why on earth did you do that? But actually that's not helpful. You know, nobody wants to be judged for what they've done. People are often very embarrassed about their financial mistakes. And instead we want to say, okay, well, there's no point in crying over spilled milk. Let's look at what we can do differently in the future to make sure that you don't get in trouble again. Okay, so we're looking forward always. And this is one of the key points that I want to get across, which is about the difference between giving guidance, which is what you're going to be doing, and giving advice, which is something that only regulated financial professionals can do. So it's really important that we get our heads around this because we don't want to slip up and accidentally go into the advice space for a wide variety of reasons. Okay, so what is advice? This is the stuff that you guys cannot do, is give regulated financial advice. And the key here is advice is a recommendation of what you should do. So if I make a recommendation to you of a specific action, or I recommend a specific product, then I am potentially giving financial advice. And an example of that, you should open a Monzo account, it'll help you budget, right? We've recommended a specific provider, we've recommended a specific product, we've given a reason why it would be helpful for that person. The recommendation is personal to you. It's based on your circumstances and your objectives. So it's basically saying, given what I know about you, you should do this. And only firms that are authorized by the Financial Conduct Authority can give financial advice. And that is to protect consumers, but it's also to protect you as well, because otherwise giving financial advice can make you responsible for the outcomes of somebody else's financial choices. And you don't want to be in that position, because if you've made a mistake, then you can get into all kinds of trouble with that. So giving financial advice, not something we want to do. Instead, we want to give guidance. So this is about helping people understand what they could do. So in the previous example, instead of sending somebody to Monzo, we could say something like, there are lots of different ways in which you can budget. We can talk about a few different types of apps and tools that can help somebody to budget better. And one of those is an app-based bank account. And there are various providers. They have a function called pots or spaces, and it could be really helpful with budgeting. We're explaining different types of products, general financial principles, generally giving people a range of options rather than recommending a specific course of action. So we're not giving a personal recommendation. We're just helping somebody understand what's available to them and understand those fully with all of the different positives and negatives associated with each one. And then it's entirely up to them what they choose to go ahead with. And anybody can give guidance, right? Any organization or individual can give guidance like this. That is not regulated, because we're not recommending a specific. We're not saying you should. We're saying these are the things that you could do. Okay, so here's why we want to stay away from advice and keep to guidance. And this key one, this first one, you don't want to be responsible for somebody else's decisions. Okay, as you said, only properly trained and regulated advisors can give advice, and they have to complete a lot of paperwork justifying why they've given the advice they've given. They have to have the appropriate insurances. There's a whole range of things that go along with being a regulated advisor. So unless you want to go through all of that, stick to the guidance side of things. But also guidance helps seafarers to be empowered to make their own decisions, solve their own problems. And it also means that the person that you're giving guidance to owns the choice. Like, it's their choice, it comes from them, and therefore they're more likely to stick with it. Whereas with advice, it can be that, you know, it feels like something that came from you and was kind of imposed on them. And then if they don't like it, I don't want to do that. So guidance is also about people owning their own decisions and taking responsibility. Okay. So we're going to do a quick check. What do we think? Do we think this is advice, or do we think this is all right? A seafarer comes to you, they tell you they've been saving money for emergencies and keeping it in a drawer in their house in cash. And you say, oh, that's not very safe. What if it gets stolen? You need to get a savings account. I'm with Halifax. They're really nice in there. Go talk to Sherry. She'll get you a good deal. Do we think that's advice, or do we think that's all right? Give us some answers in the chat. What do we reckon? Anybody got any thoughts? Is that advice or is it okay? Sounds like advice. Yeah, absolutely. Yeah, this is advice. We're recommending a specific provider. We're giving a specific, sorry, I don't know why my slides are slipping backwards and forwards. Yeah, we're recommending a specific provider. We're recommending a specific product. It's based on that person's circumstances. Yeah, this is not okay. Okay, let's look at the next one. A seafarer says they want to get a personal loan, but their bank has said no, they won't lend to them, and they ask what you would do. So you explain how to choose a loan with low fees and interest rates. You show them how to use a comparison site. And you also tell them they could talk to their local credit union, and you help them find which credit union they could join. Seafarer looks at the offers on the comparison site, talks to the credit union, and in the end, they borrow from the credit union. Is that advice or is that all right? Again, give us an idea in chat. What do you think? Think that one's okay? Does everybody agree with Rena? Yep. Yeah, absolutely. Yeah, this is fine. This is fine because we've explained a range of options. The seafarers explored those options and made their own decision. So yeah, this is completely fine. Even though we have helped them to find the credit union, which is a specific provider, we've also given the other options as well, and they've made their decision. So yes, this is completely fine. Okay, fab, well done. Sometimes when you're talking one-to-one with somebody, it can be tempting to give advice because there's only really one sensible option. And yeah, it's very tempting not to give the other options or to overweight the positives towards the one that's really clearly the best, and then not give so much information about the other things. But you really need to not do that because you're tipping over into the advice space at that point. So I will also say sometimes people who have come for guidance really want you to tell them what to do. And they will try and sort of manipulate you into telling them exactly what they should be doing. Ideally, yeah, you need to be really resistant to that and say it's really not up to me. So yeah, just be a little bit cautious around this stuff because some people really just want you to tell them what to do, and that's not your role. Okay. So just to share, that is something that can come up. All right. Sometimes there may be somebody who's struggling who doesn't actually come forward and tell you, but you will want to try and keep an eye open and spot that and see if you can have a gentle word with them. And this might be some of the signs that somebody is struggling financially that you would want to talk to them. If they've had struggles in the past, if they seem to change in terms of becoming anxious, depressed, or they're having difficulty sleeping, so they seem excessively tired. If they become less sociable, if they seem to be borrowing money for sort of food or essentials and not just for kind of big purchases. If there is something that's happened in their lives that you're aware of, where there's been a recent drop in income or sudden rise in expenses, if there's a really clear difference between, what they're earning and how they're spending, if they're borrowing really early in the month, if they go through a sort of change in behavior that seems like quite striking, that might mean that they are really trying to do radical things to save money, or if you notice that there's kind of unopened post mounting up is a classic sign as well. Now, I'm not saying that you're going to see that. I'm not saying you're necessarily going to go to people's homes and notice that, but it is one of the classic signs is unopened bills. Okay. So let's talk about one of the fundamentals of how we can help people. Let's talk about what can be really beneficial. I'm going to talk about spending plans, otherwise known as budgets. I prefer the term spending plan. Budget just sounds kind of restrictive and miserable, but what we're actually doing is just planning spending in order to fit it with our income. So it doesn't have to be super restrictive. And all we're really doing is making a list of sources of income and how much we get on one side, what all our outgoings are and how much we spend. And then we're working out, okay, I get this much on average through the month. I spend this much on average through the month. Take expenses away from income, what's left? Do we have money to save from that? And if not, what can we do about it? So there are lots of really good sources online that can actually help you to do this so that you don't have to do the maths, right? Because the thing about this is if you're going to do monthly and monthly, some things you don't pay every single month. Birthdays and Christmas, you know, they come around, each one only comes around once a year, for example. If you want to put some money aside for repairs or replacements, you don't need to replace an item in your home every single month, but you will need to have a lump for that at some point. So how much do you want to put aside each month that will go towards that eventual repair or replacement? Your annual insurance premiums, things like that as well. So you needed to be able to divide those down by 12. And so doing all that maths of like, okay, how do we turn all these figures into monthly figures can be a bit of a nuisance. And there are various ways to get those calculations done for you. One of them, the Money Charity, I'm going to plug it. It's our organization. We have a free budget builder on our website, and people can create an account. It's completely private. We don't look at your data, but it allows you to create a budget and then come back to it and amend it as and when, as circumstances change and time goes by. So that can be really useful. And there are some others online as well. The Money Helper website has one, moneyhelper.org.uk. That's an independent organization run by the government, completely impartial. Lots of really good information about money management on there. And in amongst their many tools that are really worth having a look at, there is a budget planner within there. Citizens Advice have one, Money Saving Expert, Martin Lewis's website. That also has an online budget planner as well. So all of those are worth checking out. And then there are also things like basically every spreadsheet program also has a downloadable budget template. And there are various kinds of apps as well that you can download for your phone. They can also be really, really helpful, although do be aware of the privacy issues associated with some of them. So always check what data they're looking at. Okay. But there's no use just making a plan if you go, okay, income's this, outgoings are that. Well, outgoings are much bigger than income. What are we going to do about it? We need to look at, okay, how can we manage this plan to improve the situation? So a few things that can be helpful. See what could be available for Seafarer support. We can look on the Turn to Us website where there is a free benefits checker. That can be very, very useful. Lots of people are not getting, particularly older people, are not getting the benefits that they are entitled to. We can reduce temptation by using a completely separate email account for things like online shopping, deals, newsletters, etc., than we have for our personal emails. We can use cashback sites, things like Quidco and Top Cashback, just give you a few % back on your online shopping, and those few % can make all the difference. There are places where you can find competitions to enter. I'm not saying you're going to win every time, but it can be a fun hobby to enter competitions, and occasionally you get something you want. You can sell unwanted items on eBay, Facebook Marketplace, Vinted, and then if somebody is actually in crisis, Sale, we will talk more about Sale as we go through, but Sale may be able to apply for a grant for them, and that can be very, very helpful. So just to go through a few of these, the Seafarer support website has information about a whole bunch of different types of welfare and grants that might be available. But if somebody's actually going to apply for one, do definitely recommend going to Sale to do the application for them. Mentioned the Turn to Us benefits checker. So this allows somebody to see whether they're getting everything they're entitled to. And again, if they don't have all the information that they need to put into that benefits checker, because some of that information you might need to look up on paperwork, you can create a quick account to save progress. And then they're allowed to continue their calculation later on when they've got all the paperwork. So that can be really useful. And then some of these websites can be really, really helpful for helping somebody's money to go further. So already mentioned Money Saving Expert, loads of good deals on there, which has some really useful information about different aspects of personal finance. Freegal and FreeCycle are places where people give away unwanted household goods. And there's all sorts of stuff on there. Depends on how active your local groups are. But I've certainly had some good things from there. Parkopedia is like comparison shopping for parking spots. Train Split gets you cheaper train tickets, and Idealo and Camel are ways of checking your online shopping if you know what you want to buy and you want to check different websites to find out where that's going to be the cheapest, or you want to get it at the lowest price on Amazon rather than having to search through lots of different examples. So all of those can be very, very helpful for making money go further. And then once we've done these things, we then need to track on an ongoing basis, how is our spending actually matching up with our plan? Because there's no point in putting together a brilliant plan and then ignoring it and never looking at it again. So how are we going to keep track? Well, there are loads of different methods and different people will prefer different ones. You can go very old-fashioned and just note down all your expenses with a notebook and pen. You can go very high-tech and have a budgeting app on your phone. You can take all your money out that's for your personal spending for the week in cash and just only spend the cash. And then when you run out, you're out. That's it. You can ask for and keep all of your receipts or have different separate accounts for bills versus spending. All of these have different pros and cons, and different people will prefer different ones. So they are all legitimate ways of doing it. It's just a matter of personal preference and what that person feels most comfortable with doing and fits in with their kind of lifestyle. But all of these can be very, very helpful. In amongst all of this, we have to consider the fact that, you know, even for people who are getting a regular monthly income, their expenses will rise and fall through the year. So it's important to smooth out basically how we use our money so that we don't have times when there's a bit of a crunch point and we have a difficult month, if we can possibly help it. And that's part of what this planning is about. But it's also really important for everybody to have what we call a life happens fund. You might call it a rainy day fund or an emergency fund or an oh bleep fund, depending on your preferences. But everybody has times when their costs are high. And so it's really important that everybody, including all the seafarers, put some money aside every time they get paid towards those difficult potential life happens moments, right? Ideally, you want to aim for 3 months of essential expenses. So you think about the fact that seafarers are more likely to get injured than those of us who just do kind of office work on land. So, you know, it's particularly important for them to have money to support them if they can't work for a while. Make sure it's in a different account, so don't spend it by accident, and make sure it's part of their planning. Okay. I mentioned this briefly earlier, but this is a really useful function for people to be aware of. The so-called challenger banks, many of them, and now high streets are beginning to copy this, have this function called pots or spaces or goals, which are like little mini savings accounts that sit alongside your current account. So you've got your current account and you can create these little mini pots or spaces or goals, whatever you want to call them. And you give each one a name, and that tells you what the money in that pot is for. And it can be extremely useful for you know, making a budget just more tangible. And it allows, for example, if you know that this money is the birthday fund, you know you're not going to spend it on anything else except the birthday, or you're not going to be able to buy your mum a present, and then your mum's going to be cross with you, or whatever it might be. So it can be a really useful way for somebody who tends to get a bit tempted to dip into their savings to actually see why they shouldn't. And again, it's useful for those kind of occasional expenses that don't occur every month. Thinking about things like school uniforms, for example, or getting the car serviced. When we start talking about saving and investing and building wealth and all this kind of stuff, people often think, well, here's where I am. And then what you're talking about, this kind of saving and investing and building wealth, all that stuff, is miles and miles away over here. How do I get there? And the answer is there are steps to work through. And if you think about it in terms of like these intermediate goals, it becomes a lot more manageable. So thinking about, okay, I have a week's essential expenses, I have a month's essential expenses, you know, I'm covering those occasional costs. I've got that 3 months essential expenses. And then we can start thinking, okay, how am I going to build wealth? How am I going to save for the life I want in the future? And you can see that there's a kind of graduation that you can go through to actually reach that better financial place. It's not just a kind of all or nothing. And we want to get away from that all or nothing kind of thinking. Okay, let's talk tax. Fun, favorite topic. Everybody loves this. I am going to quickly pop a link to a download that we have, which I'm going to just pop that in the chat. It is available on that Seafarers Safety Net website. This opens as a PDF, but it's a bunch of information that's really useful about tax and national insurance. And there's a lot more information also on the gov.uk website. Okay, so here's the big one. Seafarers earnings deductions. Seafarers can get 100% tax relief on their onboard earnings, which means their onboard earnings are not taxable when they are working on ship, but there are specific rules around this. So here are some of the key ones. They have to be employed on an actual ship, not on a flotel or an oil rig. They have to be resident in the UK or resident for tax purposes in the European Economic Area state other than the UK. One of those two. They have to establish what's called a qualifying period, which means that from the day they go to sea to go to a foreign port or oil rig drilling outside the UK territorial limits or outside a designated area, they start this 365-day period, of which they must spend at least 183 days outside the UK. So once that qualifying period is established and they've spent 183 out of the last 365 days outside of the UK, completing voyages that begin or end at a foreign port or oil rig, once that's established, it keeps rolling until they spend too much time in the UK. Okay. Once they've qualified, if they meet some other conditions, they can then request to use a tax code NT and be paid without tax taken off. All good stuff. This is just the basics. It is a little bit more than that, but those are the kind of the headline key points that people need to know. However, because 100% tax relief is pretty valuable, HMRC wants to know that you really do meet the conditions, so they want some proof. We need a working sheet, HS205. They want to have air tickets or other kind of travel vouchers that might be relevant, hotel bills and other kinds of receipts that can prove that you were where you say you were. They want to have potentially a look at the discharge book. They may need to look at passports and visas. They may need to look at freeboard logs of the ships where the seafarer was carrying out their duties. And HMRC can contact employers to confirm the ship's voyages and crew. So it is not one to play around with. It is something where you need to actually have proper records in order to claim this. And that's really important. Something else that's worth being aware of, some seafarers, I think, are a little bit living in the past sometimes and think that, oh, well, if I have an overseas bank account, that's harder for HMRC to check. But since 2017, tax authorities are communicating more often and more easily with offshore providers, and that does mean offshore bank accounts are getting a bit of increased attention because HMRC is a bit suspicious of them. So HMRC does expect to be informed about seafarers' worldwide income, whether they're paying tax or whether they're not. Right. So even if they're claiming the deduction, HMRC still wants to know what's going on. So if they're not submitting a return on time, even if they're not going to be paying any tax on it, if they're not submitting a return on time, they could get a fine, or they could then face more investigation, and that's the last thing you want, right? There is a helpline, including a number, obviously, from outside of the UK. So that can help with income tax inquiries for people who work on ships. It's all in the handout, all of this. And it's also worth talking a bit about national insurance. National insurance is really important if you're going to qualify for a full state pension. So if seafarers are going to be doing a lot of work overseas and they're not sure what's going on with the national insurance, they should complete the offshore workers questionnaire and make sure that their national insurance account is all correct and that national insurance they pay is all being assigned to them, And if they're sailing on a foreign flagged ship, they need to make their own arrangements to pay the national insurance contributions, because the last thing they want is not to have paid and then find themselves in a position where either they're in trouble for not paying, or they don't have the national insurance contributions to get a full state pension when they come to retire. So really important. It is a priority debt. We'll come back to that topic as well in a minute. So just really, really important to make sure that that's all submitted in a timely fashion. And again, there is a specialist department at HMRC, the Mariners Unit, who can help to check liability, make sure they're paying the right amount. If they want to top up the national insurance contribution, so say they are under that 10 years that enables you to get the minimum amount, it can actually be valuable sometimes to make additional voluntary national insurance contributions to top that up and actually start getting state pension, or to make sure they're getting the full amount of state pension. And so getting advice on that, that's possible from the HMRC Mariners Unit, or indeed if they've overpaid for whatever reason, somebody's done the calculations wrong, they can get a refund on that too. So all of those things are available, and again, well worth checking out with that specialist department. And it's possible to email this one. So again, if they don't want to be making phone calls from overseas, email might be more useful. If seafarers are paid without income tax and national insurance taken off, they need to be aware and make their own provision for paying that in a timely fashion. Need to work out how much they need to put aside for tax and national insurance. The last thing you want to do is be paying catch up with the deadline due. Keep that in a separate account again, so you're not tempted to dip into it. And just remember, there really are long-term consequences for not paying tax or national insurance. So again, gov.uk website and the handout that I've linked up there are really useful for this. They may need to submit a self-assessment tax return, make sure they're paying the national insurance on time. It can be really helpful to use an accountant if people's affairs are complicated. So for example, particularly if somebody is also, because they're away from at sea all the time, they're letting out their home. For example, it might be helpful to get an accountant to make sure those different streams of income are all correctly submitted and reported. And they'll need to keep records for their accountant as well, and just for themselves in order to, as I say, evidence what it is that they're doing. Okay, let's talk borrowing. Let's talk credit and debt. So there are a ton of different ways to borrow money nowadays, and not all of them are really obvious. Some things you might not realize are in fact products for borrowing. Things like buy now, pay later, where you're splitting the cost of something over multiple payments. A lot of people don't think of that as the equivalent of borrowing money, but it is. It's just a different form of lending. And all of these things can have different uses at different times, but some of them are much more expensive than others. And I want to mention this idea of good debt versus bad debt. So good debt is when the item that you are borrowing for is going to be a valuable item that ideally will increase in value over time. But if it's not going to increase in value, it's something that you're going to be using for a really long time, that's expensive enough that you really need to spread the cost over time. But it's not a trivial purchase. It's a purchase that is of significant value to you, and you're going to be using it over the long term. So I'm thinking about here, mortgages, potentially paying for vehicles, even something like a laptop that you can use to start a business. That might be all examples of kind of good credit use. Similarly, because credit cards provide some additional consumer protection, sometimes using credit cards for higher value purchases can also be an example of good borrowing, as long as that is then paid off ASAP. What we think about when we talk about bad debt, we're thinking here about thoughtless purchases, items that are going to be used quickly and then forgotten about. We are, and it sounds kind of judgmental to say good debt and bad debt, but yeah, it's situations where the borrowing essentially is going to have longer term consequences than the upside of whatever was purchased with that money. And some people do end up taking on bad debt because of personal circumstances. We'll come back to that. But it's just to think really clearly, you don't have to borrow most of the time, and you want to try and avoid it unless it is one of these good debt type situations. Okay. So if we're going to borrow money, we need to think about the cost, because borrowing money costs money. And one of the major ways we can think about that is by thinking about what we call APR. Does anybody want to pop in the chat what they think APR stands for? What is APR? Annual percentage rate. Well done, Michelle. Excellent. Yes, that is correct. APR stands for annual percentage rate. And it is the measure of how fast interest is being added to the outstanding balance of your borrowing. And the key thing about APR is it's standardized. So APR allows us to say this credit card and this credit card, even though they add the actual interest calculations are done slightly differently, APR standardizes that and gives me a single number I can look at that compares like with like and allows me to see that this credit card has higher interest than this credit card and therefore is probably more expensive way of borrowing. So it's a really important consumer protection to be able to use APR. And just to, it's a pretty big comparison, but just to compare a couple of different ways of borrowing. A credit card, this is typical kind of store card interest rate of 29.9% APR. If we borrowed £500 and paid it off at £60 a month, it would take us 10 months to clear that credit card bill, and we'd end up having paid an extra £60 on top of what we originally borrowed. However, for a person who doesn't have good credit, who ends up borrowing from what we call a doorstep lender, there are fewer of those nowadays because of the regulatory regime nowadays, but they do still exist. So somebody who ends up borrowing on this high APR of 250% will end up paying for a whole 2 years and will end up repaying nearly 3 times what they originally borrowed. And more shockingly than that, paying off at £60 a month is bad enough. If they only paid off £50 a month, they would never get debt-free because the interest is being added so fast on that doorstep loan. So it is really important that people try and stay clear of high interest debt. We want to get our APRs as low as we can. Okay. We have a nice little video for you guys to watch now. So I'm going to shut up and I'm going to play our video on how to avoid debt for you. Apologies, it appears that we have a sound issue. Give me one moment. I'm just, there we go. Give me one moment. We should be okay now. I'm going to restart the video and hopefully that's all right. Here we go.
If you feel like you are caught in a never-ending cycle of debt, it can be a huge worry and can impact your life and your relationships. Accessing credit can be a necessity of life, but if your circumstances change unexpectedly and you're not able to keep on top of your repayments, debt that was once manageable can spiral out of control. However you find yourself in debt, there is a way out. Understanding why you are in debt in the first place is a good place to start. This video will outline the main causes of debt and will suggest some easy strategies to help you manage your finances in the future. There are a number of reasons why you might find yourself in debt. Some are reasons beyond your control. Some are down to the choices you've made, and some are driven by circumstance and necessity. The main causes of debt are poor money management. This can happen when you don't check what you are signing up for when you obtain credit, either on a credit card or to lease or buy something new. To avoid this, always read the small print and check the total cost of the credit you are agreeing to repay. Try to pay off the balance on your credit card each month so you don't get charged huge interest rates. The debt charity Step Change says that you should refuse automatic credit limit increases and limit the amount of cards you have. Please visit stepchange.org for more information. A reduction in income. If you are sick, become unable to work, or lose your income, then you will no longer be able to afford to repay the credit you have taken out. You need to know if this is going to be a long-term setback or short-term. Step Change have a list of steps on how to handle reduced income. For example, they suggest checking you are getting all the benefits you are entitled to and give guidance of where you can get help if you are in a cash crisis. Please visit stepchange.org. Not keeping track of spending. Everything's better with a budget. If you can make a plan of your monthly expenses, you can keep on track of where your money is going and where you can afford to spend it. If the time comes when you need to cut down on your expenses, you'll know what to cut. Paying interest on purchases. If you pay back the whole amount on your credit card each month, you will not be charged interest on your purchases. If you pay less than the full balance, you will be charged interest. If you can't pay the whole amount off your credit card, you will have to pay the minimum payment. Paying only the minimum payment every month may catch you out, as it will increase the amount you pay back overall. Try to pay more than the minimum if you can. This will help you to pay the balance off quicker and help to minimize the overall amount you have to repay. Limited savings. Not having money in the bank for emergencies. Start saving. You don't have to put lots away each month. Put a small amount away. Every little bit adds up and will give you something to fall back on when you need it. If you still find yourself struggling to make more than you spend, or you find yourself in debt despite your best efforts, it's really important to understand the difference between priority and non-priority debts. Priority debts are ones that can't be ignored. They could leave you in a serious problem if they aren't repaid, as you could lose your home or your essential services, such as electricity. They are your mortgage payments, rent, council tax, gas and electricity bills. Non-priority debts are still important, but the consequences of not paying non-priority debts are less serious, but can impact your ability to obtain credit in the future if left unpaid. Non-priority debts can include personal loans, bank or building society loans, money borrowed from friends or family, credit card, store card debts or payday loans, catalogue, home credit or in-store credit debts. Work out which are your priority debts and deal with them first. You can take control of your money so it doesn't take control of you. Still need some space? All lenders are required to provide two types of breathing space. One for people who are receiving mental health crisis treatment, and the other is a standard breathing space. Both are designed to provide space and time so you can seek debt advice and find a solution to your debt problems. If you need support dealing with your priority debts, or you would like more information about avoiding debt, please seek advice. Call SAIL for free on 0800 160 1842 for free debt advice and support for all UK residents who work at sea. You can also visit the Safety Net websites for lots of free help and resources to help manage your money.
Okay, so loads of really great information in there. We're just going to touch a little bit more on the priority debt issue, because I want to make sure you're really clear about this. Because if somebody does get themselves in a position where they're really worried They don't have enough cash to cover everything, and they're thinking, okay, everybody is yelling at me and asking me for money. Which one of these do I put first? These are the answers. So priority debts are ones where somebody could be sent to prison for not paying, could lose their home, or could be cut off from essential services. Now, it's a fairly limited number of debts that where ultimately non-payment could lead to a person being sent to prison, but we're talking here about taxes. We're talking about that. So that's income tax, national insurance. We're talking about council tax, also TV license, child maintenance, and magistrate court fines. That's the other one, magistrate court fines. Okay, so for those, person who doesn't pay those could end up being sent to prison. And then in terms of losing your home, I think a lot of us are pretty familiar with that. So we're talking about mortgage, rent, potentially service charges, or any kind of secured loan that's secured against the property. And then the last one is being cut off from essential services. So that's things like fuel, but also, so if you have a hire purchase vehicle that you need to get to work, or because you live in a remote area and it's really essential for you to have that vehicle, then having that repossessed would mean you're losing an essential service. Just because something goes to the county court doesn't make it a priority debt. There's a difference between county court and magistrates court. So magistrate court fines are automatically a priority debt, but county court doesn't necessarily make something a priority debt if the court couldn't order any of the above. Now, if somebody's a homeowner, it is possible that what looked like a non-priority debt can be turned into a priority debt by the county court by basically putting a charge, what they call a charge, against that person's home to demand that if the property is ever sold, some of the money goes to repay that debt. But in general, just because something's gone to the county court doesn't make it a priority debt. So we're going to do a little quiz for a second here and find out if you've been paying attention, if you can work out whether these things are priority or non-priority debts. So here's our first one again. This is anonymous, so it's not like an exam. We're just checking to see which one you think is not a priority debt. Which of these do we think is not a priority debt? Okay, have a go. See if you can work that one out. Which one of these do we think is not a priority debt? I feel like I should be playing the countdown music. Okay, so I've got 9 out of 14 have entered. Another 10 seconds or so, if we can get your answers in, please. Don't worry, it's not a test. It's not an exam. If you don't know, give it your best guess. Which of these is not a priority debt? Okay. All right, so we've got one person who can't see it. Okay, that's fine. All right, I'm going to end the poll and share the results. And all of you who said water, you were correct. That is true because water can't be cut off. So unlike electricity and gas, which could be cut off, or council tax, which ultimately you could be imprisoned, the correct answer is water, because if you are dirty, that's everybody's problem. So we don't cut water off. Okay, let's try another one. Same question, which of these is not a priority debt? Which of these is not a priority debt? Off you go. Okay, so there's a couple of you can't see the polls. Sorry to those people who can't see the polls. It happens sometimes. I'm afraid there's not much I can do about it. Apologies. Okay. Again, most people have put their answers in. Give you another couple of seconds. Anybody else who can see it and wants to get their answers in? pretty much neck and neck on a couple of them now. All right, okay. So we've got some broad general answers, but the correct one is overdraft, because you can't go to prison for not paying your overdraft, you can't lose your home, and you cannot be cut off from an essential service. So ultimately, an overdraft is really just another form of, it's like a personal loan or a credit card. You can't lose any of those key things. Now, there are specific things that a debt advisor will do to help somebody who's struggling with overdraft debt, but it is not, in fact, a priority debt, surprisingly. Okay, even though the APRs on them are really high. All right, so well done to those of you who got the right answers. Well done to those of you who just gave it a good guess. At least now you've got some idea of what that's about. Okay, so let's talk a bit about credit unions, because I have mentioned them already. I think they're a really useful thing to know about. They are an ethical, not-for-profit type of savings and loan cooperative that is owned and controlled by the savers, known as members. They're fully regulated, fully protected, covered by the Financial Services Compensation Scheme, regulated by the Financial Conduct Authority. If you need to complain about them, you can go to the Financial Ombudsman Service. Many of them have online telephone services, so you can manage your account in the way that you would manage a bank account, and they lend small amounts at a relatively low cost, and they look at affordability rather than just going back through Experian or Equifax, somebody's credit reference agencies. They'll actually have a conversation with a person about their budget and how they're spending and affordability, and make sure that what they're lending is actually the right amount for the right purposes. And ultimately, they want to move people away from borrowing and towards saving. So the goal is always about helping people to improve their financial well-being. They provide safe savings where you don't get interest, you get a profit share, which is typically not a massive amount, but it's where are you getting good interest rates from anyway? There is not a specific Seafarers credit union at the moment, but the RMT has a relationship with a credit union. And depending on where you live, there may be a local credit union. So there's a website in the top of the slide here, findyourcreditunion.co.uk, and you can go and search on your own behalf or on behalf of a seafarer to find out if there is a credit union option for them. Great. Okay. So I was asked to have a quick chat about scams and identity theft, because this is a rising issue with in our post-pandemic world. For whatever reason, the scammers have particularly been active. So it's worthwhile having a bit of an idea about this, being able to spot it. First thing is to understand the difference between scams and identity theft. A scam is directly a fraud against you. So it's conning you out of money or property of yours for some kind of personal gain. And then identity theft is taking your personal information and then pretending to be you in order to potentially get credit, buy things in your name, or pretend to be you and commit some other kind of crime. So a scam is directly taking the money from you. Identity theft is taking your information and pretending to be you. And it's really important to understand what the signs are. So somebody who has previously a really good credit history and then for some reason is turned down for credit, that might be a sign. Unexpected entries on somebody's credit report, being contacted about a debt collection agency when you haven't borrowed the money, missing paperwork, so where you're expecting to get statements and then you don't get them, or there are unexpected transactions on your bank account or on your credit card. If you are missing key documents, things like passports or driving license that might be used to impersonate you, or if a person applies for benefits and is told, wait, but you're already getting this, that means that somebody has been claiming in your name. Okay. So if you are a victim, you want to report it straight to the bank, get hold of a copy of your file from TransUnion, Equifax, and Experian. Those are the credit reference agencies. Do report it to the police, get a crime number, because the banks will want that in order to look into whether you're entitled to any kind of compensation. You want to report lost or stolen documents, and do get in touch with Royal Mail in case you think that there might be a redirection that's been redirecting your post away from your address. And finally, you can talk to CFAS, which is a fraud protection service, and they will kind of make sure that any lenders and financial providers do additional checks before offering products to people in your name. Couple of types of scams that are particularly common. So phishing is one of them. This is where somebody phones you up, they pretend to be your bank or the police or Royal Mail or Microsoft, and they try and con you into revealing information that they can use to steal from you. So they might want to get your passwords, or they might ask you to transfer money to a different account that's safe. For example, so that's phishing. They'll often try and panic or fluster you and get you to act really quickly without thinking. And then phishing or smishing. So phishing, this is emails. Smishing is from SMS, in other words, text messages. And it's trying to get you to click a dodgy link of some kind that will either bring down malware or where you'll end up putting in your password or other information into a website where they can collect that information. There are a whole bunch of other scams going on, a lot of investment scams right now, a lot of cryptocurrency related scams, COVID related scams. I've already mentioned the kind of compromised account scams, which often are a type of phishing. If anybody's seen The Tinder Swindler, you'll know about romance scams, and I think lonely seafarers might be particularly at risk of something like that. And then there are all sorts of other things coming through on social media that, yeah, are just ways of conning people out of money. So there are some good places that you can look up to find out more about scams. Citizens Advice and Which are particularly good websites for looking up information about scams and making sure that you are not caught out. And here are some key things that you can do. Not disclosing security details to anybody. Definitely don't let yourself be rushed. Do a little gut check. Don't just assume that if somebody's calling you that call is authentic. Do background research on any companies that you're looking to shop with or take out financial products. And if there's an investment opportunity, do check the FCA website to make sure that that is a legitimate company and it is who they say they are and they are actually registered with the FCA. Don't refund or forward overpayments. And do look for suspicious payment requirements. We're looking at things like requirements to do money transfers or send kind of gift cards or Amazon cards or something like that, because that's often a sign of a type of payment that can't be easily refunded or traced and therefore often used for fraud. And then these are some useful places to report and get support in the event of being scammed. So Citizens Advice, Consumer Information, Action Fraud, which is the part of the police that works around fraud. Do talk to your bank. And also, if somebody is really struggling after being scammed, victim support can help them, whether they've gone to the police or not. Okay. We want to talk a bit about supporting older seafarers. I know that that's something a lot of you are doing, and that is really important to think about some of the specialized issues that they might come across. So one of the first things is to think a bit about state pensions. I've already mentioned that this is based on national insurance record, and you need at least 10 years of national insurance payments to get any state pension at all. The more that's paid, the more state pension you get, up to a certain point where you hit the maximum state pension amount. And state pensions are paid on top of personal private pensions. So state pensions aren't means tested. It doesn't matter how great your pensions and investments are. Once you qualify for state pension, you get state pension. There are other benefits that older people can get, things like pension credit, housing benefit, or attendance allowance, and those could be potentially, so certain pension credit and housing benefit are means tested. Checking on gov.uk to find out what a person will get and from what age in terms of state pension is really, really useful. And that can help a person to make a plan to think about, okay, what income do I need and what plans do I need to make for my retirement to be comfortable? And I do want to emphasize again, even a small amount of pension credit, even if it's only a few pounds a week, entitles an older person to other kinds of support and potentially other benefits that they otherwise wouldn't be entitled to, that can be worth a lot more than the actual pension credit itself. So if you run a benefits check for somebody and they come up as being entitled to even a small amount of pension credit, they should apply for that, because it can be valuable in other ways in terms of other kinds of support they can get, often things like local authority support and so on. Okay, so let's talk private pensions. And when we say private pensions, what I mean is anything other than the state pension. So this includes employer pensions and things like the Merchant Navy Ratings Pension Scheme and the Ensign Scheme. So there are a couple of key types. There's the defined benefit schemes and defined contribution schemes. We're going to talk about defined benefit schemes first. With defined benefit, kind of the clues in the name, the benefit, in other words, what kind of pension you're going to get at the end, is defined from the outset, so you know what you're going to get. There are scheme rules that define what you get in retirement, and so you can put a number on that pretty easily, and that's really helpful, right? And then underlying that, there are the trustees of the scheme who make the investments, and that's in order to make sure that they can actually pay out what they're committed to paying. You get a statement which shows you what you can expect to get, and that is not going to be affected by investment performance. It is what it is, and it's based on how long you were contributing for and what your salary was during that time. And there may be other benefits as well, things like spouses or dependents pensions. You cannot transfer another pension into a defined benefit scheme. But as I said, they are really quite valuable often in many ways. The Merchant Navy Officers Pension Scheme and Ratings Pension Scheme are both defined benefit pension schemes, but they are now closed to new members, and existing members can't add more money into them. So they are what they are. You can see what you're going to get, and that is what you're going to get from them. Okay. The other type is defined contribution. And in this case, what you're putting in is defined, but what you're going to get out again will depend on investment performance. So it's from the individual's perspective, there's a risk reward element in this, depending on your investment choices. So the members of the pension, the individuals investing, choose what investment funds they think will provide them with the income that they want when they get to retirement. And the statements that you get show the current value of the fund and kind of an estimate retirement income based on those investments doing well or not. And there may or may not be other kinds of benefits attached to this. It all depends on the scheme. You can transfer other pensions in from other jobs. And you can usually transfer this to a different pension if you move into a different workplace. And an example of this is the Ensign Pension Scheme, which has replaced some of those other schemes that I was just talking about. So this is a defined contribution scheme. Okay. And it's worthwhile having a little idea of how pensions work, like what are they? So during working life, the employee pays in. If it's a workplace pension, the employer will also pay in. The investments grow inside. Everything is protected from tax. So there's no tax on the investment growth. But in addition to that as well, when money is paid in, the government, HMRC, returns the income tax that has been paid on that to go into the pot as well. So a person who is paying a basic rate of income tax, for every £80 that they pay in, or every £80 the employer pays in, HMRC returns £20 of tax and pays that into the pot as well. For higher rate taxpayers, for every £60 they pay in, HMRC will pay in an extra £40 in returned higher rate tax. So they are a very tax efficient way of investing for the future. And then when it comes to retirement age, which is often defined within the scheme as what's possible, the person can then take up to 25% of their pot as a tax-free lump sum. Can be more than one lump sum, right? So you don't have to take that all at once, but the maximum amount of the pot that can be taken tax-free is up to 25%. They can also draw down, what's called draw down, some or all of the remainder as cash, and that is taxable. So 25% not taxed as income, and then there is a remainder that becomes considered to be income and is taxable. Or they could use the money in the pot to buy what's called an annuity, which is a product that takes a lump sum and provides an income for life in exchange. It's becoming a less and less popular option, but it still exists. And then after retirement, if there's money still left in the pot, it's still being invested. It'll keep growing depending on how it's invested. And the person can either keep drawing down from that as required, but if you buy an annuity, it is a one and done. So once you've bought it, there is no changing it. That is the annuity you have, which is one of the reasons, again, why it's become a less popular option than it used to be. Okay, so that's the fundamentals of how pensions work. And that's what's going on in your defined contribution schemes. Defined benefit schemes, you pay in, and then you get what's on the statement, like I said. But defined contribution schemes, this is how these work. People who've moved around a lot, done lots of different jobs, potentially lived overseas for a while, can lose track of savings and pensions. And there are millions and millions and millions of pounds in what's called dormant accounts because people have lost track of them, don't have the details to withdraw the money anymore. So using mylostaccount.org.uk means that people can trace lost savings, bank accounts, national savings and investments products, including things like premium bonds, or the gov.uk website can help people to trace a lost pension. So for example, if somebody has an old workplace pension that they had in their 20s and now they're in their 50s and they've only got a few details but don't have any paperwork from it, this can enable them to trace that, and that could be very valuable income for somebody. So I'm a big advocate for checking these details. Now, this is a difficult topic, but it is important to talk about when it comes to honestly all of us, but especially some of the older seafarers. It's really essential that anybody who has children, who owns their home or has significant savings or investments does write a will to say who they want those to go to when they die. And ideally that should be written by a solicitor, particularly if there's more than one person they want to leave that money to, or they have some kind of complexity in there. It can be done, however, cheaply or for free if that person is willing to leave a charitable donation in their will. So there are lots of different schemes that allow that to happen. Particularly, there's a free wills month in November, but there are other ways in which you can do it. If you choose one of the big charities, a lot of those have schemes. In addition to that, you can write a letter of wishes, which is sort of thing that sits alongside, it's more of an informal document, sits alongside a will, allowing a person to kind of state what they'd like in terms of funeral arrangements or other kinds of requests that are not legally binding and in the will. And I really like the Merchant Navy Welfare Board leaflet, Remembering Those Left Behind. There's just a really good information in that. It's on the MNWB website, and it's got loads of relevant information there, something that you can go and refer back to. So this topic, like I said, it's a sensitive topic, but it is one that's really important to cover. Okay, so let's talk about how we can help seafarers to get the advice they need. Where can we turn? As we said, we're not all experts in everything. Some of these are quite complex topics. We don't want to get it wrong. So where can we get advice? And the first one, and I am aware of the typo at the top of this, we only found it yesterday, is sources of retirement guidance and advice. The first one of these is PensionWise. Now, PensionWise does guidance, and we've already talked about the difference between guidance and advice, right? So PensionWise does guidance, not advice. They are associated with the Money Helper website, and they are so not for profit, not associated with any particular financial provider, but it's expert guidance from people who are very informed about pensions. And then for people who want actual financial advice, which is often a really good idea when it comes to pensions, because the decisions are big, the sums of money are big, and it's possible to sign away benefits you didn't even know you had by accident. Some places where you can get independent financial advice. If you are a member of the Ensign scheme, it's possible to get some free financial advice. Otherwise, if you want to pay to speak to an independent financial planner, vouched for and unbiased are good places to look for financial planners and find out what they specialize in, what their particular skills are, and how other clients view them. And then also the Society of Later Life Advisors has specifically very experienced financial planners, highly qualified, and they do additional qualifications and training to support older people specifically. So Society of Later Life Advisors, if somebody who is an older person particularly needs financial planning, they're very helpful. Okay, great. And then when we're talking about other aspects of advice and support that people might need, there's a whole bunch of different excellent websites. We'll run through a few of those in a second. I want to particularly highlight SAIL as being the first port of call, pun intended, when it comes to advice for seafarers. But just to flag up a couple of others, if somebody has their own business, if they're self-employed, or if they're a private landlord, the business debt line is particularly helpful. Lots of debt organizations don't necessarily support people who are running a business, particularly private landlords, because there can be a conflict of interest between landlords and tenants. And the Money Helper website is particularly good as well. So let's go into talking a bit more about some of these specifically. So SAIL, really great citizens advice. So they help with benefits, housing, and all of their advice is tailored specifically to seafarers. So this should always be where you go to first. It's all of the citizens advice services around kind of consumer and legal issues, but specifically for seafarers. So always going to be your first place to turn to. So these are some of the things that they can help with: benefits, grants, debt, employment, housing, pensions, relationship, family law, consumer issues, immigration issues, all of that good stuff. And they've got a variety of channels that people can approach them in order to get that advice. Yes, as you say, Deborah, they are excellent. And then one that I want to flag up, not because I suggest that you recommend that seafarers go to them for advice, although the advice is good, SAIL is going to be more tailored, more appropriate. But if you want to get fact sheets around debt issues, and if you have somebody who wants to do any kind of self-help, but could do with, for example, a sample letter to contact a creditor, National Debtline has both fact sheets and sample letters that are really, really great, and they keep those up to date, and you just get those from their website. So that's a really, really helpful way of getting those kind of basic information. Tax aid. So we mentioned tax issues. Again, SAIL can help, but it is worth being aware of these guys. So people on low incomes who are under 60 or self-employed, who have tax issues, where HMRC can't help. So I'm thinking, for example, where there's a complaint against HMRC. HMRC is not going to be helpful in this point. You need to get advice from somewhere else. Tax aid may be helpful. And they can give advice from tax professionals for people on low incomes. So they're really useful. And they have a sister body, which is Tax Help for Older People, which is taxvol.org.uk. And again, it's low income older people who are having tax issues. And those caring for an older person can also get help on their behalf as well. So again, really, really useful bodies to know about. And then we have Money Helper. So if you need to know about a topic relating to financial products or services, and you're thinking, I need to do some background research on this, I want to refresh my own knowledge, or you want to get some of those tools, things like the budgeting tools and that kind of stuff, the Money Helper website, which is moneyhelper.org.uk, is independent and impartial, and it has loads of great information, all in plain English. They've also got some downloads and things that can also be quite handy as well. So definitely recommend checking them out. And then our website at the Money Charity, we have something called the Money Manual, which is available to download as a PDF. It covers a wide variety of personal finance topics. And we also have more information on our website as well. So we'd love it if you come and check it out. And we already have plugged the budget planner, but we have our budget planning tool on there too. And just finally to say, so it's all very well to kind of point somebody at one of these organizations and say, here's a phone number and off you go call them, they'll sort it out. But a lot of the time that's not particularly helpful for people. And there's actually a skill to recommending that somebody go talk to another organization, particularly again around money, where people are often anxious or embarrassed to talk to somebody. So a few key things. One is make sure you know how the organizations help, what they deal with specifically, why this organization and not any other. Don't overload people with too much information and too many things to do at once. Give them one organization or two organizations to contact with clear, simple contact details, not just a great big long list. Ideally, explain what happens when they make contact. Give them a call, they'll make an appointment, you go in and speak to an advisor or whatever it might be. Explain if they are going to need any particular paperwork before they make that first contact. And do try and give a realistic idea of timescales, because people who are going to speak to an advisor often think that means it's all going to be sorted within a week. But actually, a lot of these kind of issues, particularly debt issues, do take, weeks or months potentially to resolve. So do give that realistic expectation that it is going to take time, but the point is we'll get this sorted so that it's actually not a problem anymore and it's fully resolved. You don't have to think about it again. Ideally help them to feel confident to actually make the call, answer their questions, and generally help them to understand the topic a bit more before they make that contact. So again, they feel like they're going in kind of armed and ready. Okay, so take a moment, have a think about what you've learned today, and answer. You don't have to share the answers, but it's a good idea to answer these questions just for yourself. So you might want to make a note. What have you learned today? And what might you do differently after today's training? You can share if you want to, but you don't have to. Hopefully you have some good answers for this. What's the most useful thing you learned, and what will you do differently? And I'm going to ask you once again to repeat the little poll that we did earlier. So hopefully we're going to get slightly different answers and slightly better answers than we did last time, but please do be honest. We do genuinely want to know. So, okay. How confident do you feel talking about money with seafarers now? Okay. More for any more? Good. Okay, fantastic. I'm going to end the poll now. Fab. So we've ended up moving from the lower end to broadly the top end, which is fantastic. That's what we want to see. Really happy about that. Doubly happy about all the extremely confident people. That's excellent. Well done. But really, really glad to see people moving mostly to a 4. That's really great. Yeah. So hopefully you can take what you've learned and some of those resources that we've shared on here, and you'll be able to take that forward in your work in future. Okay, thank you very much. See if there is any questions or anything in here. Great, thank you very much. Thank you. Okay, so seafarer support, it should have been in there. Let me go back and see where they should be in the presentation. But thank you so much. Great, nice information, Salem. Thank you, Salem. Thank you very much. If you come across a seafarer, active or retired, and is struggling to find accommodation, please refer to QVSR. Fab. Thank you so much. The webinar is being recorded, so we're not repeating it, but it has been recorded. And I'm sure if you get in touch with Tina, she can talk about that with you. Great. Thank you very much, everybody. It will be on the website. Superb. Excellent. Thank you. You've been a lovely crowd. If you don't have any questions, I'm going to say that's a wrap. And yeah, thank you for attending, and have a great day. All the best. Okay, take care.